Hi traders, this is Houston from thetradingedge.org. I hope you had a good trading week. Let's get to the trading outlook for the week of March 18th to the 22nd, 2019. So a few major news events to watch out for this coming week. On Wednesday at 2 p.m. we have FOMC. On Thursday at 8:30 we have the jobless claims. And on Friday we have the existing home sales at 10 a.m. All potentially market moving events, and you need to pencil into your calendar. Let's get into price action now, talk about what happened this past week, and get into our outlook for the coming week of March 18th. So let's begin with a few things today. We're going to talk about VIX, SPY, Qs. We'll quickly cover the Russell and the Dow, talk about oil, the long bond, gold, Bitcoin, as well as Boeing, that being on everyone's radar. So let's get into things. So let's first begin with the VIX. So the VIX has slowly been edging back through this broad formation that we highlighted last week on our weekly outlook video. So going back quickly, we had in October we had the outside bar followed by the inside bar pattern that resolved to the upside. Then we had the inside bar that then resolved to the downside. Now it's cutting back through the range again. So the expectation now is that it takes out the low of October, which would drive equities to all-time highs. So October's low is 25.94, and that's right now as what we're aiming towards as it cuts back through the range. On the weekly chart, we have a situation where we had an outside bar the week prior, and this week it basically gapped down, and it's basically been going back through the range again trying to take out October's low there, 25.94. On the daily chart, very quickly, we had a pretty straightforward bias this week. Once we had that gap down on Monday, equities gapped up, to the upside on Monday. We had selling right from the get-go. Anyone who went long late last week or 2 weeks ago had to cover this past week as they quickly found themselves underwater. It gapped down on Monday. If you didn't cover by Tuesday, you were really underwater, and they just kept squeezing them all week. By Thursday, they were able to break down below March 4th's low, which was that previous Monday where the sell-off began on equities, and on Friday, it just basically cleared that pivot even further to the downside. So at this point here now, the bias is still down. Doesn't mean the trades are easy. It is quite choppy in here, but at least know that your bias should be down. You're trading below the weekly open last week. It's below the monthly open, so you have full time from alignment to the downside. No reason to be looking for longs unless they're just counter trends or scalps. Okay, on the 2-day chart, you can see I highlighted that we're in a tighter broad formation on the daily time frame. We're basically, coming off this higher high, and now we've made this lower low. If you look on the 4-hour chart, this is the pattern that's been kind of informing our trading, is that we're inside this broad formation. This is the same type of pattern that we're seeing on the monthly formation, which is why we're quite well informed that it's going to come back through the other side, right? So on Friday, we gapped down on the VIX, and then Friday afternoon, we stayed below that broad formation. So on Monday now, what you want to see if you're a bull, an equities bull, is you want to see VIX continue to stay below this broad formation's trend line support. Because if it pops above it again, there's potential that spiders will come back into some moving averages to try to find support. Otherwise, if you want to be an equities, if you want equities to continue to go higher, you want VIX to continue to go lower. So you want to see this inside bar on the 4-hour chart resolve to the downside and continue to go down, and potentially get to some of these monthly levels you've identified earlier on. Okay, so on the spider, there's the inverse pattern, right? So on the monthly chart, there's our broad formation. We're slowly grinding our way back up to the highs again. And as we mentioned earlier in the week on our blog, don't be surprised to find equities at all-time highs. If we can crack above this little bit of a trend line here, everyone's talking about the trend being around 2100, that area there. If we can crack above and stay above it, then there's a very good chance that we get back to all-time highs again. On the weekly charts, it was still a pretty tight range. Other than Monday and Tuesday's action, it was a pretty tight week because, as you can see on the weekly chart, we were able to break above the prior week's range, but we ended up closing inside of it. So really, we didn't do too much last week other than regain what was lost the week prior. So one outside bar, then up, but it's closed inside the range. Okay, on the daily chart, here's what you need to watch out for though. So on Wednesday, we cracked up higher here. Let me just zoom down a bit here. We cracked up higher on the daily chart on Wednesday, and we're able to take out the pivot here on the prior Monday, where we began that sell off to the downside to mark the start of the month. Then we went inside bar on Thursday, nothing happened, and then on Friday we had a small gap up that then sold off, but then we ended up the week green, the day green, on a bunch of quadruple witching shenanigans. So a bunch of chop to the end of the day. So kind of hard to really gain any real insights from quadruple witching. Other than that, there's a bunch of people trying to settle their contracts out by the end of the day. But the next day here now is important. What's going to be the next bar? Now we're really topping up high here in terms of we're topping up, at the high end of this Bollinger Band. This thing needs to keep going, otherwise it could easily pull back down through the range again. Because if we look on the 2-day chart, all this chop from Wednesday, Thursday, Friday, it looks like this, right? So here we have an inside day that happened. That's what it looks like. An inside day. It looks like these two bars. These bars here represent this bar there. Okay, and so now we have this inside outside sequence on the 2-day chart. So a very significant pattern, because it's telling us there's consolidation, then we had aggression by both buyers and sellers, then consolidation again, as neither side could move the other side from where they stood. So who takes the advantage by being more aggressive in the coming week? Do we have bulls continue to push things higher? We have a weekly open that opens green and stays green, or do the bears take control by by being able to break below next week's open and then potentially challenging the monthly open? Because right now, as you can see, we're sitting right at that monthly open. It would not take too much if the bears are going to do it to break it back, to break it below the monthly open, to turn that month red again. That's not to say that it's going to turn to a large reversal, because right now, as you can see, last week it was a very big range, and for there to be a big reversal, you'd want to see that low get taken out, right? So this last week's low of 275.23 area, around that area there, you'd want to see that low get taken out. And that's all the way down here. So that's quite a bit of selling that has to happen, and you'll have a lot of time to adjust your positions or adjust yourself or change your bias before that low gets taken out. All right. So what could happen though is that it could be easily that the SPY comes in a bit, finds some moving average support, and then giving us even a better buying opportunity to go back up to challenge these highs again. Let's move on to Qs now. Qs had a pretty good week. Out of the 4 indices, Qs had the best week. So the Qs is firmly in the green now on the month. The week it went outside week and up, and was able to close above the prior week's range. So out of all the indices, looking the best. It's doing the good old Bollinger Band walk here, right? So on Tuesday, it broke above the previous pivot high, and since then, it's just doing the Bollinger Band walk. On Friday, we had an inside bar break to the upside. It gapped up, trapping any shorts that got involved here, and now they have to worry about where they're going to cover. So if you're a bull, it looks pretty good for the Qs. You really need to see this thing continue though, because when you do the Bollinger Band walk, it has to keep going. It has to bring in more buyers, otherwise there's no momentum, and when the momentum disappears, this is what happens here. So if you take a look at this sequence here, we had a small Bollinger Band walk from there to there, and then when you run out of buyers, it corrects, right, and comes right back into a moving average. So we want to see it. If you're a buyer, you want to see it, or a bull, you want to see it continue to go higher. Otherwise, it's going to pull back, and I actually wouldn't mind it pulling back so that we have a better buying opportunity to then challenge fresh highs. Okay, let's talk about Russell very quickly. Russell is actually the most inactive out of all the indices this past week, surprisingly, or maybe not surprisingly, as there's a bunch of headlines around global risk. So it's now a deep inside month for the Russell, going into the third week of March now, inside month, last week, inside week, and then we have our divergence, right? So this is what it looks like to have chop. You have an inside week like this, this is what that looks like. Yeah, you had a good Monday, but then Tuesday, Wednesday, Thursday, Friday, basically a very, very tight range. It looks like that inside bar there on the weekly. Now, the thing you have to watch out for with the Russell is that you don't have full time frame alignment. So one way to see the chop is to see that inside bar. The other way is that you're trapped in between the monthly open, which is up here, and the weekly open, which is down there. And so because you don't have a confluence of time frames, you basically get this chop. But if it can open up strong again next week, maybe you challenge the highs and are able to take out this pivot here at 158.78. But Russell, out of all of them right now, sort of the least interesting. You really want to see this inside bar and watch how it gets resolved, right? How does the inside bar break? So for the next week, does it break to the upside or the downside? Do we crack 155.87 to the upside, and then we can challenge this pivot up here, or does it break to the downside at some point and run back down again to the downside? Okay, so keep that on your radar. On the Dow, it's interesting for the main reason is that the Boeing news is coming out. And the Dow was able to basically still log a green week. So the Dow exhibited a lot of strength, but still firmly an inside month. So Dow and Russell still inside months. So see the Dow here, we opened up low, but was able to close in the mid range of the prior week's range. But again, you're still trading inside that prior week's range, so it's a little bit choppy in terms of the trading. And we have that again, divergences in terms of time frame. We had a green week, but a red month, and so you get a bit of this chop. So Boeing was all the news this past week, and that caused the Dow to at some point have some sharp declines. But for the most part, it's been slowly grinding higher. So here on Monday, you really want to see what's the next bar. Because on Thursday we had an inside bar. Friday we gapped up. We actually came back through the range again, creating the outside bar pattern before closing green. So what does the next bar look like? Do we have a bar that takes out the high of this outside bar? Does it take out the low? Or do we somehow again stay in the middle? Or we actually create even a wider outside bar? That's the fourth possibility, right? And so that's going to be what we need to watch out for here is how does it resolve this pattern, this inside-outside pattern? Does it just continue going, get the range expansion, or do we consolidate again before we gain some range expansion? And I think a lot of that has to do with what's going to come out of Boeing. We'll talk more about Boeing at the end of this weekly outlook. Okay. Now, let's quickly talk about the UKOIL. Not a lot to say about oil, other than that it is trading inside of last month's range. So yes, it's a green month right now, but it hasn't been able to break out of February's highs. So we're trading right back inside of February's range, and so we're getting a bit of choppy trading this past week. We had 3 green sessions and then 2 red sessions, but the bias is still up because you're trading above the weekly open and the monthly open. So long as you trade above those levels, then your bias is going to be green. And we're not expecting any major reversals until we at least see a low on the weekly chart get taken out. And right now that puts us way down at 65, 63. Until that area can get taken out, there's no need to change the bias. There's still the opportunity to buy dips here and for it to slowly move higher. Okay. Now let's talk about the long bond. Long bond was something we highlighted last week as something with potential, and there was really good potential for a couple of days, but then it got choppy again. So currently on the monthly chart, it's trying to do an inside bar reversal. So early in the month, it gapped lower, or it opened up lower, and it's been slowly coming back through the range. So anyone who got short here, who looked really smart for a few days or a few weeks, is now worried about having to cover if they haven't covered already. Last week we highlighted the inside bar pattern, the inside bar, and we were watching to see which way it broke. It did break above that high of the previous week at 121.69 and went as high as 122.23 before pulling back close to the breakout level. So the breakout's still in play. The next pivot is here at 122.54. So right now it's trading above the monthly open. If it stays above the weekly open, there's a very, very good chance that we test 122.54. So if you trade the long bond, the bias is still higher. Okay, let's talk about gold. Gold is really going nowhere fast. Once again, it's a red month, green week, so we're getting this divergence in time frames, and that's what it looks like when you have a divergence in time frames. You have red, green, green. That's kind of red because it gapped down, even though it managed to stay green. Still a gap down, so still a negative day of minus 1.15%, and then it gaps up again, but it ends up red. So you can see it's very, very choppy action here, and gold's not looking that sexy right now, because if you zoom out a bit on the monthly chart, it really hasn't gone anywhere in a long time. Look at this chart here on the monthly. We're talking about, inside of this range here that goes all the way back to 2016. If you look at this on a 3-month chart, you'll see that, right? As you zoom out even further, on a yearly chart, and not a lot of people do this, but you'll see we're actually trading inside the year. That is inside of last year, which is inside of, well, pretty much spent the whole year inside of the previous year, and that's trading inside of 2016. So we spent a good 3 years now inside this, a fairly good size range. So it's about an 8% range here. So this is about an 8-point range, but that's the range you're trading in. So very, very tight. So until you really break out of this box, out of this range, unfortunately gold's kind of stuck there. And so it's not one of those things where you're going to be holding on to a long period because it's trading sideways right now. Okay, so until you break out of there, that's when you want to get more aggressive. Otherwise, right now it's kind of going backwards and forwards. 2 steps forwards, 1 step back, 2 steps back, 1 step forward. Now, let's talk about the long bond for a second. We talked about that already. Let's talk about now. Yeah, let's talk about Bitcoin, because Bitcoin is exhibiting a very similar trait, where this past week, now yesterday, Saturday, you had a good day, you had a 2% day. On Friday, you had a 1.4% day. But for the most part, as you can see by this pattern, it's been trading sideways. As we pointed out in last week's Outlook video, we're trading inside this tight range here. Here's the monthly chart. We'll expand that. Excuse me, let me jump out of that. We have an inside pattern building here on the monthly charts. And so this is the part, a pattern we've highlighted a number of times now on this video. We really want to see how this pattern resolves itself. So we had a full month consolidation. Then we had a situation where buyers and sellers got aggressive, creating higher highs, lower highs. And now in March, neither side has been able to gain the upper hand, and we have consolidation. So we still have 2 weeks left in March, but if we stay inside month, then this sets up potentially something very explosive for April. And that's the situation that I'm hoping for, that is that we don't break out too quickly and get ahead of ourselves, that we have another month of consolidation, and then we can see something material happen here out of that potential breakout for Bitcoin. But right now, still, until it gets out of December's range, look, we're still trading inside of December's range of 2018, and that range is a 209-point range. Until we can get out of that range, don't believe everything you read in the media about Bitcoin going to the moon or Bitcoin crashing. Until we can get out of this range, it's a stalemate. So a lot to do about nothing. Okay. Now, last week we also released a video about how to spot market reversals and trade them, and I thought I'd just quickly update the chart because I was talking about it a bit online, and in that video, and I'll post a link alongside of this video, we talked about how you could use some market internals to gauge the strength of the indices. Now, if you take a look at this chart, you will see the spiders are represented by the candlestick patterns, the candlestick charts, excuse me, and the blue line is the indicator that I highlighted in the video called S1FI, which stands for the number of S&P 100 stocks currently trading above their 50-day moving average. And this is an indicator I like to watch closely to track the underlying strength of the spider. So what we're seeing in the last couple weeks is sort of a negative divergence setting up here that will help us gauge the underlying market internal strength. So what we're seeing here is that spiders, as we highlighted already, have been able to crack above the previous pivot highs, the previous swing highs. However, the number of actual S&P 100 stocks at that same time have actually been going above the 50 period, have been getting fewer and fewer. So in terms of the actual individual components themselves, we have fewer leaders now that are holding their gains and able to stay above the 50 period even as the index is making new swing highs. So this doesn't necessarily mean that we're going to sell off, because as we identified already with the spider, we really need to see the spiders break below their weekly lows before we see anything really material happen. So you want to see the low here of 275.26 breakdown. But this condition is something to be watching out for, because if we continue to see fewer and fewer components of the spider hold up strong, then this will eventually make it difficult for the S&P 500 to continue to make fresh swing highs. So right now, this is playing into our thesis that we might have a small pullback here to the S&P to find some support in its moving averages. This is the 50 period moving average for the S&P way down here at 272.93. But we're looking for a shorter pullback, a smaller pullback, that and to see whether or not that's viable or not. So we'll see how that plays out in the coming week. Now, one more name to highlight before we wrap things up on this video, and that's Boeing. So Boeing, of course, has been in the news all week because of the accidents with the 737 MAX jet. But there's been a lot of talk about Boeing potentially going out of business, which is a bit of an interesting comment. We've seen on that online a number of times. But instead of making a judgment call on that particular claim, let's just talk about the charts and what we do know. So what we do know with Boeing is that this month has been an ugly month for sure, right? So we can see here we have a large red month that's created that outside bar. That's now an outside month, and that's, you know, down 13.86%, close to 61 points to the downside there. Now it's a red month, but right now we had a green week this past week. So the buyers on Monday really stepped up on that gap down and bought it. On the daily chart, as we can see, we had that big gap down. Buyers bought it back. On Tuesday, people, sold it again. It remained inside day. On Wednesday, it looked like they were going to crack it down and sell it again. But look what happened. The buyers stepped back up again. We had that, the buyer strength there. It stayed above the weekly open all week, right? They could not close it below the weekly open. This here set up an inside bar reversal. So this is an inside bar reversal. When you break below the inside bar, it means people are getting short. Some people use that as a signal. They get short there. They could not hold it below. And look what happened on Thursday. It went inside bar again. Then on Friday, they try to break it down, but once again, they cannot. It keeps cracking and holding above that weekly open. So right now, the buyers and sellers haven't really been able to get an upper hand. It's kind of trading close to, slightly above where it opened up on Monday. The challenge with this kind of type of pattern is that you're involving a number of different market participants. You're getting some bargain hunters who are buying early and just looking to hold now. Whatever happens, they've bought their Boeing now, they're just going to sit on it. And you have the flip side, which are the speculative intraday traders who are coming in there just simply trying to play the ranges and looking for the big moves intraday to take advantage of. The issue here is that you have a really, really wide range that we have on this weekly bar now. So this coming week, this new week, how do we get outside this large range? Like we saw with Bitcoin, when you have large ranges, what tends to happen, even with gold, is that you just end up sitting inside of that range for a while. We showed that with the Bitcoin chart and the monthly chart. We showed that with gold on the quarterly charts. You could just see this thing now go sideways as it consolidates and chops everyone up who's not a long-term holder. So at this point here now, it's kind of a wait and see approach, because on the 2-day chart you have this inside bar. So these 2 days, they look big, are represented by this bar there. And now we need to watch which way will it break. Will it break above the high of this inside bar or below the low of that inside bar? If it cracks above the high and you're a buyer, you got to watch out, because that's the high here of this bar. How do you get outside of that range? It's still really far away. So it could easily just chop sideways here now and make a fool out of anyone who's playing too tight with their stops. So you need to watch out in the sequence here, as you might need to watch for another catalyst to move things around with Boeing. But the point being this: Boeing right now, as a chart, does not look like a company that's going out of business. So certainly this is a big range to the downside on the monthly chart, down close to 14%. We'll zoom in on that for a second. This is the, excuse me, I'm gonna zoom, that's the 2-day chart. Let's go back to the monthly. But if we zoom back out for a second, look at the quarterly chart, the 3-month chart. That's still a very, very strong chart, right? So we had a breakout back here back in 2016, and it hasn't looked back since, right? It shot up. We had a large outside bar put in back in October, Q4, starting October, broke down. Then we had that really nice strength come in at the beginning of the year here, and even with all that selling this past week, that 14% move to the downside, it's still a green month, a green quarter, right? So what would it take for this quarter to turn red? You'd have to take out 309.40. That's a really far range, right? So in order for this chart to look ugly, you need to turn this thing red. You'd have to break below that low, and that puts it way down here. So the way for Boeing to look really ugly is if it could somehow break below all this, which is possible. I'm not saying it's not possible, but this is when you start to worry about the company, is when you see it start breaking below this low here. That's when the chart really begins to break down. Okay, so if you look at, say, the yearly chart on Boeing, you tell me if this looks like a company that's going out of business. Let's make that larger. That chart does not look like a company that's going out of business. Correct? So it's still a very, very strong chart, especially if you compare it with companies like, let's say, a GameStop, GME. Compare the difference. This looks like a company that's in trouble, where you have the quarterly lows getting taken out, and then you have very strong aggressive selling quarter by quarter by quarter. And now you're going after the long-term holders who are buyers way down here. Now you're testing the metal, even the strongest of holders, as you go back through these really deep ranges. And it all starts on these weekly highs, right? So if you pull back all the way here on GameStop, you at least want to see some of these weekly highs get taken out, right? And so you see that weekly high there, it gets blown out. That's, you want to see more continuation of that if you're going to be a short in Boeing. So you want to continue to see these weekly lows continue to break down and to take out some of these significant levels like the quarterly lows, right? Look at Weight Watchers. That is what looks like a company that's in trouble. Now Boeing does something like this, where you have a red quarter and it breaks below the low of the previous quarter, then you have a company that looks like it's in trouble. But right now, Boeing, if you compare that quarter, as you saw already, it's still a green quarter. So in my opinion, it doesn't look like a company that's going out of business. Yes, it definitely has some struggles going forward, but the charts right now are not indicating a company that's going to be in financial difficulties. Now, news could come out and change this, but in terms of the price right now, it's not indicating that whatsoever. So, as always, have a happy trading week, have a good trading week, and be responsive to price. Don't try to be predictive.